On the topic from opinions to ownership, cashless is your gateway to smart investing. I would like to call upon Mr. Prashant Chauhan, AVP Business Development, ESOP Direct, a Qapita Company. Mr. Prashant holds more than 11 years of rich industry experience, has worked across different sectors in the services industry from non-banking financial services company, large investment bodies, tech solution providers to IT service companies of reputed groups in India. He is currently a senior business development manager at ESOP Direct, a Qapita company, a pioneer in the space of equity compensation for more than 2 decades now. So, ladies and gentlemen, let's put our hands together for Mr. Chauhan.
Thank you for giving that introduction. Hi everyone, I'm Prashant. Before starting this session, I just wanted to understand, though I know most of you will be aware of what ESOP is, and in certain of companies ESOP is already implemented as well, but just wanted to see your hands as well, who know ESOPs, and maybe in their companies ESOP has been implemented as an instrument. Great, happy to see that numbers. Anybody know, I mean, since you know ESOPs, maybe you also have participated in monetizing activities like from a private companies, maybe a liquidity event or a buyback. But in terms of a listed company, maybe you have participated in an excise event. So just want to see your hands as well there. Anybody? Great, great. So though there are a couple of names, but so today my intention of having this session is, though I know ESOPs is something which majority of the people know nowadays. It's more of the trend now to inspire and along with gauge the interest of employees in the company. However, more lucrative part when we speak about ESOP is how one can monetize it, how one can see the value that is being driven from ESOP. So basically today's objective of the session is, from my side, I'll be speaking upon different ways to a company can monetize ESOP, and how those different routes can help companies from different aspects, because generally the stakeholders, when we speak about these strategies, are either employees, companies, then it can be trust as well, and then it will be brokers. So these are certain stakeholders that will come into picture. So let me quickly dive you to my next slide. So in this, as you can see, generally there are two sort of approaches. One is cash, other is cashless. So cash is something which majority of the companies start with whenever they implement an ESOP scheme, which is also called an conventional approach. Why it is called conventional approach? Because generally whenever an employee will be exercising, they have that option to either debit it from their accounts, or their salaries are being debited, or they have different mechanisms, because company do have different mechanisms like RTGS or payment gateways through which they debit for the exercise the employee is doing. And while the employee will be exercising, generally two parts which comes into picture is, one is excise amount. I'll come on to what excise amount I'm talking about, and perquisite tax. The second is external funding. So what external funding here is, in companies where there are majority of the employees who are covered, like the size is high, there let's say mid-level employees maybe does not have certain background of, or money in their bank account while they will be exercising. So there the company generally look for financial institutions who can help them with finances, maybe help their employees to finance ESOPs while they will be exercising. Then the second part is cashless. So cashless, basis the regulation change that has happened under ESOP in 2021. Earlier there was sell all and sell partial, but now sell all has been discontinued, so sell partial is there. So I think majority of the people who know what cashless is, they will be aware about sell to cover. So basically whatever you are selling, there will be a portion that will be exercised to cover the expenses you are required to pay to the company or to the government. Now, while we will be discussing this, the one important question that certainly will be coming in your mind as well: what is cashless? How cashless will leverage your employees? So when we speak about cashless, cashless is you are giving an opportunity to your employees that yes, they can have their skin in the game, they can have their ownership in the company as well, but along with that, they will not have any sort of obligations in the sense while they will be paying to the company or the government. So there will be no obligation there. Now, how this obligation can be nullified? So I'll be, commenting on that now. So this is a small example which you can see. This is a, I try to make it simple to make you understand. But this is the steps. Generally, there are 8 sort of steps that we implement, when we set up a cashless process for our company. And fortunately, in my company, I do have this process which I can give to either a private company to a listed company as well. So the first step is where employee selects that yes, while he's, once an ESOP is given to an employee. So just to give you an example, once a company grant ESOPs to employees, it goes to the stage of vesting, be it graded vesting, be it performance-based vesting, be it, other sort of vestings. Once he, crosses that stage, he reaches to the next stage of exercising them. So while the employee will be exercising those units, he has to select what payment mode he will be selecting. So on our platform, we have an option where he can select whether own funds or they would like to get cashless. So cashless is a mode which employee selects here in the step 1. Next step will be tentative calculation. So this tentative calculation basically helps the employee understand what is the excise amount which the employee will be paying and what is the perquisite tax which the employee will be paying. Now, how this is being calculated? So there is a strike price at which you generally give ESOP to your employee. With the space of time, that share, let's say, or that option from 20 rupees maybe, just for example's sake, reaches to 200. So this 180 appreciation that has happened, on this actually the perquisite tax is being calculated. So which is why tax calculation is very necessary, though while demonstrating tentative calculation to the employee, we do the last last day price, if in case there is a company is listed basically, so we can fetch that from the exchange. We do have that updation on the system as well. Besides that, in case of unlisted companies, we have FMVs basis on which we work. So that tentative calculation has been shown to the employee. Employee have seen that calculation and accepts it. As the employee accepts it, employee moves to the next stage where our platform, the platform will help employee to generate excise form. So excise form will be generated. Employee will push that yes, I would like to excise. It will be intimated to the broker. So there will be 2 entities now. As you can see, there will be company, there will be trust, and there will be broker as well. Sorry, 3 entities. Sorry. So platform will update the broker. That's yes. There is a there are a set of employees who want to pursue cashless transaction, and also they will notify the total units because calculation has already been done. So what will the units that will be squared off? Then they will go to the next stage of step 4 where settlement will come. So now the responsibility of the broker here will be to sell the number of shares which are which the employee would like to exercise. Basis that, settle the, so the process is like, for example, if an employee would like to sell 20 shares and the obligation on him, which includes excise price plus perquisite tax, is 13 rupees. So that will be settled through cashless process. Remaining 7 rupees. So let's say the share price right now in the market is 2 rupees. So if we round off, it will come around 3.5 shares. So that will be transferred to employee's demat account. So when the transfer will happen, that will happen through the settlement. So there will be settlement which will be done by the broker. The perquisite tax will be given or sent to company's bank account. Next part will be transfer of shares. So there the broker will update the trust. Trust will transfer those shares to employee's demat account, and the process gets complete. So in general scenario, this process generally takes, like for a direct route, a company takes around 45 days, 25 to 45 days actually. But in terms of cashless, it sums within 9 to 12 days, which is almost 30% of the time you or your team will be consuming for performing that activity. And mind me saying that while this exercise will be happening, there will be a lot of days. I mean, if you are going with a direct route, you are giving almost 30 days or maybe more than 30 days to your share or to your option to go in the market, whatever the settlement is or whatever the fluctuation which is happening with the sentiments of the market, that will implicate on the share, and that value will be driven to the employee. So to reduce this, cashless process is one of the very important, process or mechanism that can be implemented. Now, what advantages, a cashless generally brings for a company, for an employee? So it eradicates the burden to the employee of being, out of pocket. So basically, the example which I was giving earlier, there are certain set of options which the employee is exercising. However, for those set of, and obviously it will go to the stage of appreciation as well, from 20 rupees to 200 rupees. So let's say in case me being an employee, I do not have that amount. So where I'll get it? Whether I'll get funding, or how will I be able to pay that? Or whether I have to just, get off that, opportunity which I'm getting. So in that case, I will have that option that yes, I do not have to pay anything from my pocket. Automatically it will be settled. The perquisite tax will be settled, besides the excise amount will be settled, and it will be transferred to, the remaining shares will be transferred to employee's demat account. Second is leverage equity ownership. So while we were talking outside, so one of the delegates, I was speaking about SARS. Somebody have implemented SARS as well. SARS is stock appreciation rights, and they have implemented through equity, but we also have cash settled SARS. So in cash settled SARS, you do not have options to give to your employees to have ownership. And the first intention of implementing an ESOP scheme is to motivate employees to work better for the company, and your productivity increase, and basis that your your overall productivity of the company will increase as well, and obviously there will be wealth creation for the employee as well. However, in case of such instruments, there is no ownership. So so if you are having ESOPs and you are giving that option to your employee that yes, go and do it through cashless, so they will have ownership as well. There will be no obligation on the employee, and they will be saved from paying taxes. So capital gain tax, obviously the person has to pay once he will reach, or she will reach to the stage of owning that option into share. But in terms of perquisite tax, which he is required to pay in the initial stage while exercising, that obligation will be removed completely. So that is an advantage for an employee, that yes, his pocket will not be affected. Fourth is time efficiency. So as I was mentioning, in a general direct route, you almost will be taking 25 to 45 days. So why will you take that sort of amount, while performing that excise event? It will, the value, the monetizing value that actually your ESOP should create, it might will dilute it. Reason being, you do not know, what will be tomorrow your share price is, obviously, despite of the fact your company is performing. So in those scenarios, such small processes will help you save from those fluctuations. So which is why this 9 to 12 days, which is 30% of almost the actual, time estimation of the direct route, is useful. Now, there are few questions, while I'll be explaining, who knows cashless or ESOPs might will have in their mind. One is, can I perform cashless in private markets? So for unlisted companies, yes, this is basically a wrong understanding that cashless is not that lucrative for unlisted companies. It is very much lucrative, to be very precise. Why it is very much lucrative is, again, you are giving your employee the opportunity to, have less obligation and still have skin in the game. Besides that, while you are implementing it, if you are implementing it through a trust route, you will have your own marketplace implemented. So generally, me being an, let's say I'm an investor, or if I'm running a company, if I have to, source funding for my company, I have to go to the marketplace. I have to check what options I'm available with. I cannot rely on my internal resources. So in such scenarios where we have a trust and we are implementing a cashless opportunity, trust will withhold that obligation, because trust will work as a catalyst there. So why I'm saying catalyst? Because trust will be able to create you that opportunity that yes, if you have, because in case of unlisted companies, you only have primary shares. So you can get those shares, trust can directly buy those shares from the market or from the employees, and you can run a buyback event, very, very simple buyback event within the company, where employee will get the wealth value. Besides that, the obligation of the company will be reduced, because it will not show in your books of accounts, it will be shown trust books of accounts. So that mindset will be removed, or you will not have that headache that yes, मेरी company में ये होगा, मेरी company में वो होगा. Second question is how much time does it take of money to hit the bank account, which I've already mentioned. More efficient is cashless, which is 10 to 12 days. I'll be giving an example of this as well, just to read the last question. Are there any other alternatives to cashless approach? That yes, there are alternatives. So let me first cover. So what I've done here is I've just bifurcated, the days which you actually take for your respective transactions while you are performing those direct, exercises or processes in your company. So payment almost, once you exercise 5 to 8 days, it will reflect to your account. Then payment will happen within next 15 to 30 days. In case you have, other options, or, you want employee to sell them as well from the, once they have exercised it, then again it will take 2 to 3 days. So overall, if we see, the process will be almost 2 months long. So just to avoid that hassle, we have this process which is cashless, which is very short in terms of cycle, eliminate market or financial risk, makes it easy and hassle-free for your employee. Now, the other question was whether I have any other option to perform cashless. That yes, we do have another other option, which is through an empaneled broker. But trust me, this is a very tedious task. If you want to empanel with a broker, I'm sure most of you have empaneled or do come in conversations in your earlier in previous conversations with any sort of brokers where you may have traded or something like that. So their broker do takes time. They do have their timelines. They do take T+2, T+5 days for a particular transaction, and post that also reflecting those units to your demat account takes another 5 to 10 days. So just to avoid that hassle, and when you have more employees in the sense when you have wider coverage like 400, 500, empaneled with the broker will be a challenge. So who will manage it? Because ultimately they will only do transaction. Ultimately it will be you, your secretarial team, who will be managing all the back-end processes. So it will be better to have a trust, because once a trust is placed, and mind me, trust is not a entity which will abide you from or which will help you follow certain restrictions within the company. It will be a sort of a SPV, special purpose vehicle, and it is implemented only to support you as a company from certain challenges. And one major challenge is, kya ye mere balance sheet mein reflect hoga? No, it will not reflect to your balance sheet. It will be trust account where it will be reflected. Besides that, there will be a lot of other things that trust will be taking ownership of, which I'll be mentioning in some time. Now this illustration which I have, which you may can see on the screen, is a small example of how a excise transaction take place, how the perquisite tax is being calculated, and how the end result, which is transferring those units to employee demat account, transferring perquisite tax, and even if there is some cash remaining, how that is being handled. So in this example, there are around 1,000 shares which has been granted by the company to the employee. 250 have been vested. Excise price is 100, at which is the strike price. Market price is 300 as on today. Option exercise under cashless route, which is sell partial. So I think I have not touch base on sell partial, so little bit I'll touch base. So sell partial is again sell to cover, where only the obligations will be settled for the employee. Remaining units are transferred to employee's bank account. Now 200 is basically the options which the employee requires to exercise or wants to exercise. Now the calculation will be, as you can see, excise amount, which is 100, multiplied by 200, which is the option which the employee requires to exercise, which comes to 20,000. Then perquisite value. So perquisite value basically will be calculated on the appreciation. So here you can see excise price was 100, market price is 300, 200 is basically the appreciation. So you will multiply 200 with the total units which the employee would like to excise with, which will come around 40,000, and you will deduct 40,000 from that 20,000. So basically on that 40,000, which is the appreciated amount, employee is required to pay the perquisite tax. Now on that 40,000 also employee needs to see what tax slabs he fits in. Let's say employee fits in 30% bracket or 40%. So basis that, the tax amount will be calculated on 40,000. Once that has been calculated, that, as you can see on below, shares will be transferred to employee's demat account, which will be 93. 107 will be round off for the perquisite tax and excise amount which the employee is required to pay, and the remaining 100, which will be on the last leg, will be sent to employee's bank account. So this is how a cashless transaction is being settled. this is one of the, just a snippet of how that is being represented on our platform. Employee, this is how employee will be able to see what calculation will be done, how they will be performing cashless. So just a snippet for you to have a look. Now, benefits of cashless. Generally for employees, there is no cash outflow because obligation is not there on the employee. It will be settled there and then sell to, which because of sell to cover option. Then employee also will have that option of early liquidity in case there is a liquidity event taking in place. So you do not have to wait for investors to come into. It's just that liquidity event can be exercised from the platform, and employer will receive those options in their, for initially it will be on trust. Later on it will be moved to, once the company gets listed, it will be transferred to employee's demat account. For a company, it will improve the user experience. Besides that, it will also help the company to enable all these calculations to the employee, because for a private company, it's very difficult to make them understand what the wealth they are creating for the employees. So to make your employee understand, obviously it should be visible somewhere. There should be some interface. So we have an interface which basically, as per your FMV, it will highlight all the calculations, and employee will be able to understand that, yes, this is what the company is doing for me. And from a global perspective standpoint, in India, around 75 companies who are using this, and all the listed companies where trust is enabled, majority either wants to go with cashless or already have cashless implemented. Now, from a trust standpoint, what are the benefits of trust? So basically, it reduces the exposure to price fluctuation, uh, then efficiently handling wide employee coverage, streamlining cashless exercise, enhance share controllability for capital basic. So this basically means that once we are having this option in place, the dilution constraint for a promoter, for an investor will be reduced. Reason being, there is no secondary transaction that will be happening. There will be secondary transactions which will be happening, so the promoter does not have to dilute anything. So on the existing share only, the transactions or exercise will take place, and on the same leg, the transactions will be executed as well. Tax implication on ESOP trust. So considering three entities, employees, trust, and company. For employee, it will be tax neutral because until unless he exercise the perquisite tax and capital gain, he is required to pay, but there will be at different stages. Initially, it will be settled at their end, and since it will be cashless, so automatically those will be handled during the stage of cashless exercising of those set of options. From a trust standpoint, trust is liable for income to hold. Trust is liable for the income to. So basically, trust also gets income from dividends. So while an excise transaction takes place, whatever the remaining shares, trust is obligatory to pay the perquisite tax for, or the excise amount for the shares they are holding. So which is why this is something which works as a constant which the company is required to see while thinking of a cashless module or through a trust. Sorry, just a minute. For a company, again, there will be no burden on the company since it will be handled at a trust level. However, for a company, they will have that option to purchase from the secondary markets because trust will be able to help them on that same. However, cash outflow will be high. Reason being because there will be cashless transactions that will be happening. So for a company, if the company is cash rich, this will be a better option to adopt. Else, they might can think of adopting it at a later stage as well. Now, where we come into picture, so obviously that was one of the areas where we have forte in. However, from a company standpoint, we help companies from the seeding stage, where we help companies in structuring their ESOP schemes, implementing it. We sit with your board, understand the vision, objectives, and basis that we help you implement the right ESOP scheme. Once that is implemented, we also help you in managing that ESOP scheme through our platforms. Once that is done, all the compliances that is across the ESOPs, we do that. We do have valuations, we do help in financial valuations, grant valuations, and if you are required expense amortization reports, so that is also something that we do. For listed companies, we do have a marketplace, we do help companies in syndicating, warehousing, so all these services we do provide. So these are a set of clients. We have overall we have around 2,200 plus clients, but we have around 51 unicorns as on today. We have around 120 Nifty 500 companies with us. So these are the few clients we have. We have the privilege of having them, and these clients are with us today as well. Few names, thought of checking their, though these are our clients, but I thought of checking their annual reports as well. So these clients already have trust in place. So while they have trust in place, it's more obvious that they will also have cashless as a mechanism implemented within the company. So we have our team there. We have a booth outside. In case you have any queries, we are more than happy to assist you. Please do come, and we can have a separate discussions as well if required. Any questions, I'm more than happy to address. Thank you. Yeah.
Thank you so much, Mr. Prashant Chauhan. I would like to call upon Mr. Vikas Maheshwari on the dais to do the felicitation.